Has the Queen, Nancy Pelosi, and other members of Congress ever bought a stock and profited from the information they received while in office?
Over the course of your career, has your husband ever made a stock purchase or sale based on information he's received from you?
What are you saying?
Over the course of your career, has your husband ever made a stock purchase or sale based on information he received from you?
No, absolutely not. Okay, thank you.
Today, we're going to look at the latest stock trades from the best investor of all time, Nancy Pelosi, and a protege of hers, Marjorie Taylor Greene. See what they're buying. Nancy Pelosi lately has been buying AVGO, Broadcom, and NVIDIA. She's been buying NVIDIA. Quite the momentum trader. I don't know if she's an investor necessarily, more of a trader. So let's do a quick analysis of both these companies. Let's pull up AVGO, which is Broadcom. So these are both, remember, she's in San Francisco, near the Silicon Valley, the head of tech, and she's buying two tech companies. What the heck does this woman know that we don't know? All right, mediocre returns on invested capital. $848 billion market cap, 842 versus 937 enterprise value. One thing I do love, free cash flow, $18.5 billion last year, $14.5 billion the last 5 years versus their net income. Big differences. Free cash flow is way higher, which I love. 65% gross margin and a very consistent around 25% profit margin. 1 year PE, 82. 1 year price of free cash flow, 45. So it feels expensive. Now, I don't know when she bought them. I don't know what price she paid right now. But let's go look at the 8 pillars and what story they're telling us about Broadcom. Expensive, increasing their shares outstanding. Guys, they're diluting investors, but I don't blame them. Why? Because their stock's expensive. Okay, ROIC, nothing to write home about, but still a check mark. $19.7 billion in revenue growth led to $8.5 billion in cash flow and listen, these are pretty decent. A little bit higher debt. Oh yeah, because it was so much higher. Okay, I'm not blown away by this, thinking to myself, I got to go buy Broadcom. But it's interesting nonetheless. Let's see what analysts are saying. I'm sure analysts are all going to increase their targets now that Nancy Pelosi has bought, doubling their earnings per share in the next 4 years. Wowza. And revenue going from $51.5 billion to $84.5 billion, 60% increase in their revenue. So when was the last time I did AVGO? June of 2024. Remember, these do not include the balance sheet, but I did 5, 8, and 11% revenue growth. I did profit margin of 22, 25, and 28%. Now look, the free cash flow is so much higher. It's 38, 42, and 46. I did a PE of 13, 15, and 17, because I think it was the fact that I don't like this ROIC. So I gave it a lower PE and price of free cash flow. And again, my 9% return. What's the company worth if I wanted to match the market, which is 9 or 10%? Hit the analyze button. I'm pretty far off here, guys. A low price of 300 to 550, high price of 750 to 1250, middle price of 500 to 830. Now, if your first reaction to this is, oh, Paul, your numbers, what's going on here? This is crazy. Well, then you're probably not an investor. You're probably a speculator. You're probably going to determine your ability to make money based on stock price going up or down. That's not what we're trying to do here. And I don't think that's what Nancy Pelosi is. She's probably not trying to do what we're doing. We're looking at buying a stock as buying a piece of a business. Just remember that, okay? So let's go see NVIDIA. The hype of all hype right now. The king of hype right now is NVIDIA. This company is absolutely crushing it. It's up another 2.5% today. It's up to $135 a share. Remember, this is after a 10-for-1 split. It'd actually be $13.50 right now. Incredible. Wowza. Great balance sheet. Much better than Broadcom. Market cap, enterprise value, exactly the same. Most valuable company in the world. This is absolutely incredible. Look at this growth. 5-year average free cash flow is $12.5 billion. Last 12 months is $40 billion. $40 billion company. It's selling for 85 times free cash flow, 270 times the last 5 years. Now, just to get right into it, NVIDIA's flying high, and that's awesome. But remember, every investment is the present value of all future cash flow. If you are just paying attention to this, you're not an investor. And I'm not trying to say that to be disrespectful. Just understand where you stand. You can make a lot of money trading stocks, but caring about the fundamentals is not how you're going to make money. But if you look at it and say, man, does that really justify the price? You're probably an investor. And if you're watching this video this far, you're probably that kind of person. And I love it because what we're trying to do here is realize that when you buy a stock, you're buying a piece of a business. Now, I don't know what the Pelosi's do behind closed doors in terms of how they analyze things. I don't know, but it seems like they do a lot of trades. They recently sold Visa and Tesla. Did they sell Tesla before the recent run-up? I have no idea because it's up 51% in the last month. So maybe they did recently sell it. I have no idea. But Visa, man, Visa's a great company. If they bought it at a low cost basis, just let that thing ride. Unless Mrs. Pelosi knows something, right? So let's go see what the 8 pillars on NVIDIA tells us. What's the story here, guys? Now, shares outstanding, basically even. So I'm going to call this a check mark. I'm just going to ignore that. But it's just the really high PE. Now, keep in mind, though, guys, their free cash flow and their earnings have drastically increased in the last 5 years. So this is a little misleading here. But the question you have to ask yourself is, are these last 1 year net income and free cash flow going to be a flat level? Is it going to pull back from here? I'm not saying it will. But if you remember, after COVID and the shipping companies and car companies were making money hand over fist, what did we say? Pump the brakes, guys. They have a temporary hold on the market. There is no doubt in my mind that NVIDIA has a temporary control of the chip market for AI. But there are a lot of chip makers out there who are going to get into the business. And more competition means lower margin, means lower profit. Doesn't mean this profit can't go up. Because if the market keeps growing like crazy, then this profit can still go up even with their margin decreasing. I'm just telling you that is what I have seen countless times before. So let's see what the analyst estimates are. Well, the analysts think that this company is just going to the moon. $1.30 in profit to $5.83 in 2029, beginning of 2029, with revenue growth every single year. Good God, 4x their revenue in the next 4 or 5 years. Maybe they know something we don't know. I don't know. But the question you need to ask yourself is, are price and value disconnected this way? Is price higher than value? Remember, growth and value investing are the same thing. The goal of value investing is no matter which way you value the company, whether it's growing fast, declining, staying the same, you come up with a value. And your goal is to buy it for less than that value. You can value invest in a company that's growing 30% a year and a company that's declining 5% a year and a company that's increasing 5% a year. It's revenue and profit. All it takes is discounting those cash flows today. That's why we use a stock analyzer tool. Value investing is not separate of growth investing. Growth investing, people confuse. They see, oh, there's a lot of growth. I would gladly pay a lot of money for growth. Gladly. But what usually ends up happening is the premium on growth becomes so nosebleed high that you can't justify the investment. But then people see the stock continue to go up and say, man, you're missing out. Yeah, maybe I am. I could be. That is a fair point. So I just want you to remember, there's no knock on NVIDIA, the company. It's the valuation. Look at these revenue growth numbers I put in. 10, 20, and 30% for the next 10 years. Guys, 30% growth for the next 10 years. 30% growth for the next 10 years. If you don't think that's a lot, let me tell you. So 30% a year for 10 years. That's 13.8 times. Let's call it 14 times revenue. They did 80 billion last year. 0, 2, 3, $1.12 trillion in revenue. Could it happen in 10 years? Sure. Is it probable? I don't think so. But if you think so, I'm just telling you right now that you have to see if the juice is worth the squeeze. So let's see if it is. So I sat here, I did 10, 20, and 30% revenue growth. I did profit margin of 30, 40, and 50. So I went to this past 12 months profit margin, put it in there. Free cash flow, I did the same thing. PE, I put a 30 PE for a company that has $1 trillion in revenue. 9% return, hit the analyze button. Yeah. If you think that's going to happen, 318, you're going to get a 20% annualized return on your money. But guys, if they just do 20%, it's 5.89. If they do 10%, you're going to lose a lot. And 10% is still a lot of growth for a company that does 80 billion already with those kind of margins. Amazon did 20% growth a year for a long time, but on what margin? 2, 3, 4%? It's a totally different game. Totally different game. I just think that NVIDIA is worth way more than it was 2 years ago, but I think the upside is not worth the downside. Now, whether you agree with me or not on individual stocks, what we're trying to teach here is a process. All this software in this community was all created to teach a process. And you've noticed, if you come to our site, that we have limited the number of spots available to join our community on the software. And the reason for that is the software as exists today includes everything we have to offer for stocks, real estate, and retirement. All of these tools right here. Now, we've been spending a lot of time talking to our users, and we're making some changes behind the scenes in the near future. And that current offer of including everything is absolutely going to go away. As we talk to the community members, the feedback has been that people want to focus on the specific aspects of the Everything Money tool that applies to them at that moment in time. They don't want to have this cheesecake factory of page after page of options. And we don't want to be the cheesecake factory of software. So if you've been watching the channel for a while, you'll remember that this software was built selfishly for myself and my team so we could use it. And we use it every single day to buy real estate, to buy stocks, and to plan for our futures. But as the channel's grown and our community has grown, it has to become less about me and more about how I can help serve you and the other community members. Now, the good news is these changes have not been made yet. So if you join today, you will be grandfathered in for life with all these tools, every single one of them. This is the best deal we are ever going to offer. I'm telling you this now because there's still time to get all of this if you join today. So go click the link in the description below. Join and you'll get all the tools before we make these changes. It'll be the best investment you make all year unless you follow Nancy Pelosi's trading. That'll probably be the best investment you make all year. Now, Marjorie Taylor Greene has bought Lulu, Costco, and CrowdStrike. Let's check them out quickly from a high-level perspective because I want to sit there. Now, Lulu has fallen considerably as of late. If you look right here, back in December, it has an all-time high of 516.39, and it's currently at 288. Guys, can I ask you a question? Who would have thought that in 6 months, the stock would fall by over 50%? Almost 50%. That's my point of everything. The point is that even great companies like Lulu, and nobody can deny that they make a great product and women love them. Even men love Lulu. Mo, as part of our channel, loves Lululemon clothing. That's my point. But just because it's a great company doesn't mean the stock's always going to go up. That is what I'm trying to teach you. And for those of you out there who sit there and look at short-term price movements as validation for being right or wrong, that's incorrect because look at Lululemon. We're going to analyze it here. Maybe it was a great buy at 500 and it goes down. We don't know where a stock's going to go. And every great investor will tell you that you buy a stock at a good price, it's going to go down from there. You're never going to buy at the bottom. What's important is you understand what you're buying. You understand that you're buying a piece of a business that is hopefully getting better. So if the stock is going lower and you already thought it was a good value and the fundamentals are continuing the same way, you buy more. That's what we're trying to teach here. So what do the 8 pillars tell us about Lulu? First off, great balance sheet. All right, it might just be a valuation thing. Look at this balance sheet. 1.5 years of free cash flow is all they have in debt. Not buying back a lot of shares, which I'm good with because it seemed a little pricey. Because right now it's at 21 price of free cash flow and 23 PE after falling 45%. Not buying back a lot of shares. Revenue growth, $6 billion in the last 5 years, led to $1.4 billion in more cash flow and $1 billion net income. So they generated more cash flow growth in the last 5 years than net income growth. Very nice. I like that a lot. Very, very like that a lot. Okay. So what this is telling me here is, oh, look at this ROIC. Good Lord. Then I'm looking at this going, it's just a pricing thing. They've grown a lot, so I don't know about this PE and price of free cash flow over 5 years, really worrying about that, because it's, as you can tell right here, the 5-year average free cash flow is $800 million. The 1 year is 1.73. So we're looking at this going, okay, now there is a disconnect between the 5-year net income and the 5-year free cash flow, but hopefully that equates itself out. What are analysts saying? EPS growth, doubling in the next 5 years, 1271 to 25, according to analysts. Doubling, literally exactly doubling. Revenue growth, basically double digits every year, from 10 billion to 16 billion, 60% growth. Pretty solid, guys. Pretty freaking solid. So, is Lulu worth it today? Well, here's what I did on Lulu back in the day. 5, 8, 11% revenue growth. What I want to show you this, the last 10 years, 23% ROIC, last 5 years, 24%, last year, 28%. Not only is the ROIC high, it's growing. This tells me this is a company with a strong hold in their market. They have a good moat. They have a good competitive advantage. I love that. Profit margin, 12, 14, 16. Same with free cash flow. I put 15, 18, and 21 for the PE and price of free cash flow. The reason I did that, clothing can be very fickle, and people can lose interest in clothing very quickly. I want to hedge a little bit there, but the real hedge is put it in your desired return. Because I only put 9% in here. But guys, I want to make a note here about this. This is very important. I want you to hear before we go further. Notice how I've talked about Lulu. Lulu's an incredible company. They got great products. They got a great brand image. They got great awareness. Everything is great about them. But I'm looking at the numbers in the stock as a totally different thing. I'm going to consider that when putting in some numbers here, but I'm not going to let my decision on what I love about the company dictate just me buying the stock. That's very, very important. When I had that battle years ago with that other YouTube guy, the shyster, and he said, I researched Tattooed Chef and I love the company. You should research the company first, understand the company before you even look at the numbers. 100% wrong, in my opinion. It's a combination of both, but if anything, make sure the numbers even make sense. Because if you spend all your time falling in love with a company that has terrible financials, you just wasted all that time. Find the companies that make sense to you. That's why the stock analyzer tool is so useful. Go in quickly, put in some assumptions. If it's even close, then dig deeper. This will save you a lot of time. Look at the 8 pillars, figure that out. Look at the analyst estimates. All these tools are there to look at things quickly to save you time. That's what's most important. So I hit the analyze button. Boom. I have a low price of 166, high price of 430, middle price of 270. I have my watch list at 200. Guys, click the link in the description below. Join that community before, so you can get all the tools before spots run out. If you want to see Nancy Pelosi's past purchases, watch this next video.